Hi guys, Harry Otis here, professional trader for 20 years now. Started my career in 2005, still alive in 2026. So, big news of the day, market in August, starting off with a very, very strong start. It's up 1.4% because I guess the war is winding down again for the nth time, okay? But it just goes to show you how strong this market is, okay? I was hoping that we would get a down move first so we can pick up some stuff. But nope, we just have to go higher. Okay, this is very, very bullish. Okay, we kept saying that the market is strong, the SPY, the overall market, despite the fact that the semiconductors were being hit, okay, which is a very, very good sign. And once the semiconductors stop going down, the market's going to go up. So maybe the semiconductors started going down. Well, we'll talk about the strong start and what that entails going forward. But first, let's talk about the technical picture, guys. Bullish, neutral, I would say. But if we bring in the moving averages above the 50, I guess we're bullish right at the highs, near highs. Okay, so I guess you can say we are neutral to bullish. Okay, so the technical picture, we kept saying that after a big strong move, it starts consolidating. Technically speaking, it's usually a continuation pattern. It usually breaks out to the top and keeps going. And the reason this market is like this, it's because it's fundamentally strong. Earnings expectations in the future have increased dramatically. Okay, it's like you can't fight the fundamentals when they're on your side. Okay, so yeah, technically speaking, strong. Fundamentally speaking, strong. What about the sentiment? We're just at neutral. Plenty of room to go higher. Neutral momentum. Okay, stock price strength. Put calls till people were buying puts because they were super scared. Even at highs, we saw how high the bears were in the AAII Investor Sentiment Index. Okay, but to me, this is the key. Breadth. Okay, this is what it's all about. We were at extreme fear. We need to get it to greed. I think that's what happens. We're cycling into it. Okay, because we were saying this whole time that this market's going up. Okay, and the reason is it was prevented from going up was because the semiconductors were down. But now, if the semiconductors are forming a bottom, then it's just going to continue to go up. It's like holding a beach ball down. Okay, so yes, the sentiment now is plenty of room to go higher. Okay, so let's get to the strong start. Okay, this is a very, very strong start to the month. Trump over the weekend said that he might negotiate with Iran. Who knows? It could be BS. Okay, I suspect he keeps this narrative going this entire week. See what happens. See what Iran says. Okay, so what you have is the SMH. Now we kept talking about it. Okay, up today, but not out of the woods yet. Still in the downward trend. Okay, all we want to see is the SMH sort of making a bottom. Okay, not becoming an anchor on this market, which is great because if it continues to go higher up, it doesn't have to go to new highs. As it's going higher, SPY will go into new highs. Okay, and that bodes well for what I'm looking at. The breadth here will cycle higher. Okay, you have other sectors picking up the slack. This is what the SPY was telling us. SPY was telling us that it was super strong, holding at the highs despite the fact that Leopold was blowing up and using 400 plus leverage and having to sell his AI portfolio to Citadel and others. Okay, so you have this good move happening in the underlying strength of the market that is outside of semis and tech. Okay, so let's get to oil now. Okay, oil down here. Okay, it doesn't $79 a barrel. This could be a lower high, as we're saying. We don't know. This all depends on Iran and Trump. However, I like the fact that it's a downward trend and it's not breaking up to above the $100. Okay, so the market is telling us no, oil might go down. There might be some kind of deal, or there are mitigating factors. Oil is getting to the market somehow, or players are not as vulnerable to the oil market as we were in the 70s, in the 2000s, in the 1990s, etc. Okay, there are substitutes. There are workarounds, okay, and you don't know it. The oil players who are deep in the game do, you don't. But all you can see is that this all you have to know is that this world is awash in oil. It is way, way more efficient to get it to market right now. Okay, so it is fundamentally bearish, just like the SPY is fundamentally bullish. Okay, so we also saw gold today hovering, not really doing anything. It's in the meh stage. Summer doldrums still there, but it is consolidating. We don't know what's going on. Okay, I like the fact that it's doing this. Nobody cares about it. I'm expecting a move, higher in the months ahead. Okay, it's going to be a months long move. So let's forget about that by now. Okay, so let's get to the final stage. Okay, we have longs here that we are riding, longer term longs. However, we don't have any shorter term trades that we made, except this is earnings season. Okay, so we do have, this is earnings week. We saw today PLTR, okay, announcing earnings. And what did they announce? Revenue surged 93% year. Okay, so they probably destroyed. Okay, more events. Let's see what it says here. Q2 revenue beats expectations, raises the outlook. Okay, everything seems to be up. Cash flow guidance looks good. Everything here looks good. Okay, so as you can see, aftermarket it's up 136. Okay, will these defense industry stocks go up? Because a lot of the defense industry stocks are muted. Okay, but Palantir seems to be doing well. We'll see tomorrow exactly where it opens because we don't know. It's always aftermarket. Aftermarket, could be very, very, a fool's game if you play it. You don't know if it's going to be like that in the morning because the morning is what matters. Okay, so we saw Palantir. We have other earnings coming up today, this week, a lot of them. Okay, and I played a couple. Okay, I'm not going to give you all my earnings trades, but I'm going to give you one. Okay, I like this stock. Okay, Shopify. It's going to announce earnings Wednesday morning, so you better be in it by tomorrow if you want to play it before. Okay, so tomorrow means Tuesday. So this is how I'm playing on the long side. I think all these stocks are beaten down. These, how would you call them, SaaS type stocks. Also Net, Cloudflare is also announcing, and this is at highs. Okay, so, but I like Shop. And how am I playing it? Okay, let's get to the analytics. Okay, it's a little bit of a complicated earning structure. It looks simple. It's a call spread. Okay, I am buying the 125 calls and selling the 127 calls. However, it's diagonal. It's a calendar. Okay, so I am selling the August 7th, 127 calls because they're going to announce earnings this week, and I want to take advantage of the volatility crush that happens after earnings. Okay, volatility usually is bid before earnings and it crashes after. Okay, and I am buying the August 14th later. Okay, the back month. Okay, so the front month, I'm selling the front month, buying the back month. Okay, and it gives you this kind of profile. Okay, I did it for $1.60 per contract. So you can do it for 172 at this point. The beauty of this trade is that it takes advantage of the vol crush while still allowing you to be long and going with a bullish trade. Okay, the max loss is 172. The max profit is 646. So you have like a 4-to-1 type of risk reward, which is great, with a chance of profit of 65%. These are the kind of trades you want to keep playing. Okay, this is where the stock is trading at right now. It's trading at 117, and okay, even if it gets to 115 or 117 or doesn't do anything after earnings, you're still going to make money. Okay, and the reason we are doing this is because this is the key here. Look at this implied volatility. Okay, the implied volatility for the August 7th option that we sold is 145, and for the August 14th is 102. Okay, we expect this one to get crushed. So the one we sold is going to go down in volatility, and the one we bought is probably going to stay up and not go down as much. Okay, you can model it here by, this is the volatility bar. Let's say we knock it down, volatility falls by a lot, like 35 percentage points, okay, which is a lot. Okay, we can still make money. The chance of profit is still at 50%. Okay, so when you play these kind of games with a chance of profit of 50% after a vol crush, okay, this is assuming both get crushed. Okay, the August 14th and the August 7th get crushed, which is not going to be the case. This one is probably going to go up. Okay, so worst case scenario, you have a 50% chance of profit, but an outside move. Your loss is way lower than your profit over time. Okay, over time, this is a positive expectation trade. Okay, and it's like at the money. Okay, so you're flipping a coin. Think of it this way. You're basically flipping a coin. The strategy is flipping a coin. And when you win 3. And when you lose 1. Okay, you want to continuously play that game. Okay, and the chance for profit is 50%, maybe higher. Okay, if the vol doesn't crush that much. Okay, if the stock goes down, the vol might actually increase. Okay, so your break-even point will drop even lower. Okay, to maybe now the break-even point here is about 106. Okay, so that's like 30% lower. What is that? 106, 10, 11, 10, 20%, who knows? Okay, so this is where the stock's trading at right now, 117. So this trade, I love it a lot because your loss is defined. You have a higher profit, okay, than the loss, and the chance of profit is 50% or over. Okay, so as things stand right now, your break even is 5 percentage points lower. So this stock can go lower by 5 percentage points, okay, and you still make money. And you bought a call spread, okay. The key is buying it, in a diagonal, in a calendar spread. Okay, that's what makes it profitable, and not just like if you were to do this, if you change the expiration to the same, look at this. Okay, your chance of profit will be 32%. But your gains are like 2 to 1. Okay, this makes it much better. It takes advantage by choosing 2 different expiries. You take advantage of the volatility crush on the one that you sold, and the 125 call that you bought doesn't fall down as much because it expires the next week. Okay, I've done these trades a lot. Over time, they will pay off. Okay, this is like a bread and butter type of trade. Okay, this is what I generally like to do in earnings, although there are other trades that are great as well, structures that are great as well. However, this to me is coin flip in terms of percentage chances to win with outsized returns, with a 3 to 1 win to loss gain or ratio when you do win. Okay, so this is called the diagonal spread, and that's why I like it. Okay, so you can do it for everything. You can do it for, we saw that coming up, we have Cloudflare, net, you can do it for net. Just go to the earnings calendar, you can see all the earnings are expiring, and you can play those earnings. So this is what we're gonna do when the market didn't give us a chance to go position ourselves longer than we wanted. Okay, remember, we do have trades like Nike that are long-term longs, and Sprouts Farmers Market, which are other stocks which are doing well. Okay, so we are still long other quote unquote breadth stocks. As breadth increases, these should go up, but I would have liked to get longer. Okay, I don't know if we'll get the chance. This is looking very, very strong. So we'll just ride with what we have, and we'll continue to play these earnings trades that are putting the odds in our favor for a win. Okay, so that's it, guys. Okay, strong start. The one thing I would like to mention is that the VIX, see, is really low at 15. Okay, so this is when you actually want to buy volatility. So, but it could go lower, go to 13. Look, it even go lower. You don't know. Okay, so rather than guessing, okay, you want to like play option strategies that put the odds in your favor and limit your risk at this stage of the game. Because remember, August looks like it's a huge up day in the beginning. Okay, this is what we call 3 green soldiers. The next move is usually higher. Okay, we'll see. Okay, nothing has changed yet. We're still fundamentally bullish. Technically, it looks bullish, and sentiment, we still have a ways to run. Okay, so that's it. Don't overcomplicate it. Go with the trend. All right, guys. Later.